Welcome to the Final Bar. I'm Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. And on today's show, this is really exactly what we're going to do. We're going to focus in on some changes that are happening in the market, and then how to use those changes and maybe perhaps go back with the scanning tool or something to find some interesting setups. So we're going to take a more unique road and hopefully build on that just to show how you could set something up. So looking at a change in the market. So today's example for scanning for examples, and today I'm going to use a change in trend in the US dollar. And so let's go back and look at another period where the US dollar was falling, and then how do we search that data, and then what we could do is we could take that data, we can compare it with the ticker cloud current data if that situation is starting to set up again, and analyze the results and just try to get a feel for if we're on the right track. So as an example, if the US dollar was going to fall, what stocks rose up the last time the US dollar fell, and we could go find those through the scanning engine. So we're going to try and work through that today, and just really, it's not so much about today thing, it's all about having this idea that when things are being set up, you could get on board with that. So what we see here, first of all, is the US dollar at this point in time, and I'm recording this on September the 20th. What you can see is the US dollar is breaking down. And, in the last couple of days, it's really broken down. If I used a bar chart, it would be, just put this on here just so you can see the difference. So on the bar chart, there was a little bit of a different trend line. And anyway, it's really starting to break down, but it doesn't matter how you slice it. In the last week, the market's moved quite a bit, and we're now below zero on the PPO. The RSI is broken below 40 on the daily, so it's definitely getting down near an oversold bounce. But in general, what happens when the US dollar gets weak? We want to find that stuff and try to profit from it. So we're going to spend some time trying to look specifically at that. So what I want to look for is some period in time. The US dollar was declining all through here, so we could pick June of 2017 just to take an example. So something as the market was starting to fall, that was breaking down, and here you can see the US dollar topping out. So even if we pick June 1st or something where it's really kind of well on its way, and try to get a feel for that. Okay, so how would we do that? So I would go to the members dashboard, and from there I would just quickly go and start to make a new scan. And I'm going to make this, pretty general. We're not going to solve the world's closest problems here, but we're going to get an idea of some stocks that might typically move. So if you just opened the scanning engine, what I really want to look for is what stocks were strong back then. And so one of the ways to get to back then is you click in this box here, and it'll bring up a calendar, and we said we wanted June of 2017, and we could just pick a day, June 1st, 2017. And with that, we probably want a little more volume. We're looking for some big stocks, not tiny stocks. And the other thing we're looking for is we want them to be outperforming. And so one of the easy ways to look for an outperforming stock way back then is we want to go back and find the SCTR large, and we're going to add that, and we want them to be greater than 75. And then we'll also look for SCTR mid-cap stocks that are also greater than 75. Just to change it up here, trying to show you some different ideas. This isn't to be the stringent rule of the day, it's just to help you get set up. Now, you can't be in a large cap and a mid cap at the same time, so we have to change this clause to or. And usually when I try to do that, I would put it like this. So when we're looking for the SCTR information, we just want to put that all in brackets together and set it up so that it's one large group. So we want a stock, we want the daily volume average to be above 400,000, and we want SCTR to be greater than 75 way back on this day, or mid caps greater than 75. Now, what that's going to do for us is it's going to give us a group of stocks that we're really doing well. But the results today will show a low scooter, or will show a different scooter than we actually searched on. So it's important to remember that it's going to show that we're going to scan on something that happened way back then, but it's going to show the current values, the current price, the current everything for those stocks. So as that comes out, that'll work out just fine. But we need to remember that. Now, the second thing, let's just say whatever. We don't think, we're looking for something that's US dollar related. So I'm thinking industrials, maybe some financials, maybe commodity related stuff. But let's just pick an example and say no healthcare. Okay, so first of all, if you wanted healthcare, how would you do that? And so you would go down here to sectors and just grab one, and we would just say, okay, here's the healthcare sector, and we're going to add that. Now, one of the things it's going to say, and the group is healthcare. Well, what we don't know is how to write the scan code for not being healthcare. And so I'm going to show you how to do that very easily. So first of all, the people inside stock charts, there's a few people that are absolutely diligent on working very hard to make sure this stuff is really easy to find. And so I'm going to go down here to writing on scans, and I'm going to open the link in a new tab. And so what we get up here is we get what is a scan and everything, and scan clauses, and it explains it. Now there's a button right here, Scan Syntax Reference, and that's going to be our shortcut today. But I want to scroll down and show you a whole bunch of things. So you can use text is not, contains, doesn't contain. So we're going to, instead of it saying in this box here, group is healthcare sector, we're going to say group is not healthcare sector. Now there's a whole bunch of other ones that you could do, but I could scroll all the way through here, and there's an option down here for sectors and industry. So we can specifically go into that one. And again, I'll just right click on that and open a new tab. And with that, what you get is the sectors and industries, and specifically for the group. So the operator you would use is not, and an example is group is consumer staple sector, or group is not equal to clothing sectors or clothing accessories. So when you work through this, the idea is that you can literally just find this stuff set up very quickly. It's at the bottom of the scan engine, and it's really quite it's phenomenally well written. And so with that, you can get in here. Now, the one thing I want to show is that we just literally went straight down that page. We could have also went directly into what's called the Scan Syntax Reference. And I encourage you, if you like scanning at all, to just move through this, and it'll take you to a shortcut to all of this. But anyway, it is really well written stuff, and very, very helpful. So I want you to make sure you don't feel overwhelmed with how to code this stuff. Just go get it, and it said that we should use the term group is not. Now, again, we could get rid of financials, we could get rid of whatever. But what we want to do is slot these things together, and we want to figure out the biggest way to eliminate things quickly so the scan engine sends us our result pretty quick. So in this case, we're looking for a stock that's going to get rid of ETFs and indexes and everything else. And to have the volume right up here at the front is okay, but we're actually it's doing a bit of work to find that. But anyway, we're going to leave it up there. But the next thing to quickly say is we don't want healthcare. So don't calculate the SCTR rankings all the way through the healthcare sector only to find out that we're not interested. So let's get rid of that first, and then do this large scan. Now we can hit check syntax and just make sure we're okay. and it says we are, and then we would run this scan. Now when we run the scan, I've got all of these headings I've opened up here, so let's just get rid of some of these. But what usually happens when you run a scan is it will open the scan results in a new tab. So here's our new tab. And as it comes in, we've got 227 stocks matching 329 trading days before the last market close, all of this information. Now that's still a lot of stocks, whatever. We could raise the volume, we could do whatever we want. But let's just leave it there for now. It's not really going to hurt anything. So what I want to do is I want to sort on the current SCTR, and I want to select industry and sector in that order. Now what's going to happen is it's going to group all of the cyclicals together, then it's going to group them by their individual industry group, and then it's going to give us the current SCTR ranking of all of those. So let's, and the important thing to remember is everything on this list had an SCTR ranking above 75 in the middle of last year, which was a very bullish period. The middle of 2017, which was a very bullish period. So we know that some of the things that happened that year may or may not have been related to the US dollar. And so, as much as I've quickly put together this information, you could quickly strip out whatever you want to strip out. But I think the important thing is, what we're trying to do is just set up some sort of a filter to give us ideas. Now, maybe we all agree that Costco has nothing to do with a low US dollar, or we all agree that Alibaba does have something to do with a low US dollar. And so you can work through this group by organizing things just in an orderly fashion. And again, I would save these into some sort of temporary result. So I'm going to replace an existing chart list, and I happen to have one called scanning greater than 75 breakouts. So I'm just going to go dump it in there, and I'm not going to preserve, or I want to preserve the sort order because I've got everything sorted the way I want it. And now I say OK. So as this data populates, the one thing that happens now that we've actually put it in a chart list is when we highlight over the ticker symbol, we're going to get a 1-year chart. Now, obviously, it'd be a little better to get a 1.5-year chart because that's what we were looking for back then. But let's quickly look at the US dollar. And what we can see is the US dollar spent all of 2017 bottoming and then rising for most of 2018. So from February to August. So we'd probably like to see the stock rising during a weak US dollar and falling during a strong US dollar. So just, again, we're not trying to make rocket science out of this. We're just going to be relatively fast. And does it make sense that something in the consumer staples section is a strong stock or whatever? So I would literally just roll through these and just, highlight a few. Now, this one's a pretty good example. What was it? Nestle. And so what you see is Nestle was doing very poor when the US dollar was strong and very recently started to pick up in July. And the interesting thing about that is the US dollar topped later in July, so it might not be too reflective, but it is an international company, so that could be one to be worth watching. Anyway, here's Unilever. It's a Dutch company. Let's check and see on that one. Doesn't really make sense. Now, obviously, some of these cyclicals, there's a whole bunch of companies. Do you really think restaurants and bars are related to foreign? Maybe, Yum China Holdings or something like that. But I think when we get into the heart of it, right, we're probably going to find out that, maybe some of the financials, but I'm thinking more in this industrial area. And so way back then, John Deere was running like a deer, and you could see that it was going up while the US dollar was falling all the way into the top of 2018, basically made its lows in August when the US dollar made its top and started to rally back the other way. So now we have an example of a stock that's doing the opposite of the US dollar. And, we can click on that chart and just plot it. So let's do that. And now we're going to go down here and very simply, we're just going to get the price of something, and in this case it's the US dollar, and we're going to make we're going to put it behind the price. We're going to set up the style so it's a solid, well, let's do solid line so it's easier to see, and make it green and work through that. Okay, so now when we plot that behind the chart, what we should see is as the US dollar is falling, the stock's basically rising, and yeah, I'd say this is a pretty good correlation. So there's a little bit of a period here where they both rose, but for the most part went up, bottomed when it topped when the US dollar bottomed, it went down, and now that the US dollar has changed direction, it's starting to change direction. So, and we could clean up that chart just to make that a little easier to see. We would go solid line and change the line colors. It's John Deere tractors. I guess I can't do green. Well, maybe we should do green because it's John Deere. And nothing runs like a deer, and it's the green paint. So let's go with that, and we'll change the US dollar. Okay, so here we go. And in general, I think our concept is pretty good here, but we've gone back to confirm that John Deere, basically when the US dollar was strong, John Deere was weak, and now as the John Deere was strong and the US dollar was weak, and now we've got the dollar starting to weaken, and it looks like John Deere's just breaking above its 200-day moving average. That's probably a pretty nice place to get on board. And as we roll this out, we can just add more time to the chart. But the point I wanted to find out was, when did John Deere start to run up over its 200-day moving average? But everything was pretty bullish from the election forward. So anyway, the purpose of all of this was just to kind of give an idea of a method to go look and find some stocks that might be working. Now, obviously, maybe some gold miners worked in there. Maybe, import-export companies like railroads that are bringing products in and shipping products out. Here's Arconic, and Boeing as an example is obviously probably a choice in this kind of stuff. And so when we look at these, we can just literally go back in time using this function on the top to go pick your time. And when you click on it, you just flip to the calendar date you want, and it'll automatically calculate the days ago. So it doesn't have to be hard. Now, I haven't saved this, but to do that, you would just save this scan as whatever, Greg finding a strong stock a long time ago, and hit OK, and that's going to keep it. Now, when you're working through this, that's going to give you an idea and some stocks. But this breakdown in the US dollar has just happened recently, and so we also have some other tools we can use, and I mentioned them in the introduction. But what we can do is we can go look for stocks that are starting to take off in here. And as we look through this list, like here's Alibaba, and here's Caterpillar, and was Caterpillar on that list? Well, we could go back and look, but let's just open the link on Caterpillar, and what we see is the stock is pretty much doing the same thing John Deere did. It was on a bullet move up, and then it's gently pulled its way back, and it started to reaccelerate above the 200-day moving average. Scooter ranking starting to go back above 75. And that's kind of the behavior we saw when everything was in an uptrend last year. But even then, or in 2017, but even then, Caterpillar was basically moving up average, and then it really started to accelerate and go much faster than everything else. So the idea being that if you look at today's current ticker cloud, and you could screenshot it, you could do whatever you want, print it out, and then just go through and look at some of the symbols that you might think are correlated or not correlated. There's some gold stocks in here trying to jump around, this is another gold stock here, precious metals stocks. So as you look through this list, the point I want to make is that it's not an absolute, but it's giving you an idea of what industry groups are strong. So if we go over here and we start looking through, here's a lot of electrical components and equipment that were doing very well way back then. And I don't know what Trimble does. We could quickly look at the chart. Wow, it's really taken off. Um, so, we could go investigate whether Trimble, if it makes sense. Now, here's Sony, and Sony's been, that doesn't look correlated at all with what we've seen in the dollar, so we're probably not as interested. But you could look through some of these and just see if it makes sense that they're on this list because they were in a US dollar or just because they have a strong product and they were just moving up on their own anyway. The idea that I was proposing was you wanted something correlated to the US dollar, so it should look somewhat opposite the US dollar. It doesn't have to be day for day and all that kind of stuff, but it should have a general trend of down as the dollar's up and up as the dollar's down. Okay, so with all of these different choices, when you look through here, again, all of these semiconductors, they had an unbelievable year last year. Now, was that related to, was it related to the US dollar? And, this KLAC chart doesn't look like it. It's just a crazy ride. But you can get the idea. So now let's keep rolling through here. What I'm looking for is industrial stocks and all of these different ones in here. I think that, here's XPO Logistics, taking a look at that. Here's CSX Corp, just move my chart up a little bit. So as you hover over these, at least you can quickly get a look. That one, ABB, that's probably an interesting one. It's currently got a scooter of 55, starting to improve. And I think it's Swiss, if I'm not mistaken. Might be Dutch, but I think it's Swiss. So anyway, there's that might be an example of another company. And I don't think this is very hard work. You're just relaxing at your desk, rolling through. There's Arconic. That one looks pretty much like a US dollar opposite chart. And just quickly peel through to see if there's ideas that you like there, and then you can go look at those current charts. So what I would look for in the current chart list, again, let's just click on this ABB or go to Arconic. What I want to see is now it's starting to break out as the US dollar starting to roll over. It's breaking through horizontal support. That's probably not a bad place to enter. Now, the one complaint I would have is the scale on this whole chart is $7. So, I'm looking for some big moves, and 350 of that's already gone. So now the problem is I'm looking for the next 350 on $24. That's barely 10%. So I'm not really interested in that trade. What I want to find is something else that I could work with. So let's pick this Arconic. And on the Arconic scale, we can see, yeah, this one's a little better. It's a 100% range between the top and the bottom. And so if the stock was to move back to $32 from $23, that's a $9 move or whatever on 20 bucks. That's 40%. If we could catch something like that, I think that would be a worthy thing to look for. So what I'm trying to do is just find some interesting stocks, and whether or not you want to use the exact methodology I did, it doesn't have to take a long time. I think we did that scan thing in a couple of minutes, and if you had to spend some time reading through some of the beautifully prepared and organized scanning documentation, I don't think it would take very long to try and find that. Okay, with the when we're looking for changes like this, now you could also look into the bond market. So as an example, in 2018, the bond market is just starting to break above 3%. Now that's a pretty big deal. And whether or not it gets going, I think that would be important. But what's interesting is if we go back and look what happened the last time it broke out of these big bases, we could do the same thing for stocks that surged, say for whatever, from November to December, or from September to February, whatever. Pick some time in there where these stocks went on a big run, and then go and try and find some stocks that match up with bonds. You could do the same thing with oil. You could do the same thing with natural gas, gold, whatever. You get the idea. But again, the concept doesn't have to be stuck on the US dollar. You could also use emerging markets. So when EEM starts to soar, this was pretty much a big uptrend topped with US dollar. Hasn't really started to reverse yet. So perhaps, this one isn't going to work out right here. But I would say that, if all of a sudden the RSI starts to move above 60, you've probably got some sort of a trend change that you haven't seen on the US dollar. If we went to a weekly chart and just took a look at it, basically if we could get it back above the 10-week moving average, that would be good. The full stochastic looks like it's making a divergent low, so that's usually a strong thing to look for. And what I really like is this PPO has kind of had a long run down already, and so it would probably be ready for a mood adjustment just to the upside. So looking at all of these things together would suggest just a different method of trading the whole US dollar thing. So is this a good time to enter emerging market shares? CEW, I think, is the emerging market currencies. And so you can see how this one really hasn't started to improve yet. But if this was to start to break out, full stochastic looks like it's ready to give us a signal. And, we've got this slight downtrend here on the PPO. So all of these things working together can give us some ideas of ways to go look for things. And I hope what I've done is set up a method of checking, the scan workbench using some of the documentation to help you find the exact coding you want, omitting some groups that don't make sense so that your scan isn't as long. When you find those stocks, then put them on your radar, and if there's a certain sort of breakout, like you like the full stow above 20 and you like the PPO curling up on the weekly, then you've got it on your watch list. If that starts to occur, then you might want to take that trade or something like that. Okay, just to go back and wrap up again what I had mentioned. So we're looking for some sort of scenario in the market that's happening, probably something big picture, and then we want to go back and look and see how the market responded in prior episodes of that, and to see if the stocks that we're now looking for are going to start taking off. And maybe the example might have been the airlines could have been another one that we looked at. I just made a few examples, but I hope you get the idea. Searching data from a prior period is easy to do, but you have to remember that the results that show up on the screen are today's price and today's scooter ranking, that type of thing. And then once you're in that situation, compare it with the current ticker cloud. And if you start to see a correlation of these stocks coming back into favor, it's probably a good correlation to make. And industry groups in general should move together, so that could help you. And hopefully just some of the analysis of the results on ways I kind of filtered things out that wouldn't make sense, like bars and restaurants or something. But looking at industrials in this particular case and seeing how they match up. Thank you for taking the time to join me. I know that you have lots of things to do with your time, but what I want to mention is the Final Bar airs live on Thursdays at 5 p.m. Eastern. It can also be found on the Stock Charts TV schedule at other times during the week. In addition, you can look for it on the Stock Charts YouTube channel. And with that, have a great weekend and good trading.